Welcome back to the Brent Bruce Daily. Today is February the 8th, 2023. It is now 2:21 p.m. Central Time, and I need to get you updated as to what is going on, especially after the very difficult report that we received last Friday, which kicked our interest rates up 0.5% in just 2 business days. We're going to take a look and see where we are. Also, we're going to go through the calendar because I didn't do that yet for the month of February to tell you when the reports are coming out that we need to receive. After the last couple of reports that have come out, we need to see a good breath of fresh air. I will talk about my projections and if I am continuing to stick with those projections. I'll show you the interest rates of today. But I do want to take a moment and thank all of those new subscribers. Make sure that you have liked this video. If this is helpful to you, do me a favor and go to the YouTube page, click the like button and click the subscribe button because that is helpful to me and helps me to continue to put this information in front of you. This information is what you don't find anywhere else, which is the insight on how home loan interest rates really move, what the interest rates really are, and why they move, the education as to why they move, which is something that especially the real estate agent community really needs to learn a lot more about because there's a lot to it. And it's helpful to your clients if you know what's going on. Or even when they say, hey, what do you think is going to happen? Well, at least maybe you won't want to tell them, but you could point them to this video that has a lot more detail as to how these home loan interest rates work. So basically, let's take a look and see what is going on with the market. Again, we talked about that we had a really rough day here on Friday, opened up Monday way down here. Tuesday did not do much for us. Here we are today, broke below the floor of support, but got pulled back up. This is a strong floor of support that we're sitting on right now. And hopefully we'll be fighting with the 25-day moving average and the 50-day average, 50-day moving average here pretty soon because we need to get through those so we can get back to the fight that we really want to be in, which is with this Fibonacci level here and the 200-day moving average. Guys, when we get consistently above the 200-day moving average, look at how much room we have to run. This is when we're going to get into that 4.875% interest rate environment that we talked about. My projections for the year are that we will be at 4.875% on a 30-year fixed conventional home loan with no points by July the 1st of this year. We have a ways to go. And unfortunately, a couple of the reports that came out recently did not move in the direction that I wanted them to go. Not enough. They moved a little bit, but really not enough. So we've got to do some pretty aggressive work. Now, how is that going to happen here? What reports are going to be coming out? Now, as we always talk about, there's 4 main reports that we are paying attention to. And then now I guess we should really start talking about the 5th report, which is the jobs numbers and the employment numbers, because that was the one that came out of nowhere and really knocked us down, knocked us backwards 0.5% in 2 business days. That's pretty aggressive. So the reports, again, you should know this. The announcement from the Federal Reserve as to what they're going to do with the federal funds rate is report number 1 and the highest of importance. Number 2 is a personal consumption expenditures report. Number 3 is a consumer price index report. Number 4 is a producer price index report. The 3, number 2, 3, and 4 are measures of inflation in the U.S. economy. They are then what causes the movement or what leads to the movement to the federal funds rate by the Federal Reserve because they need to get inflation under control, and inflation has been going as high as 3 times to 4 times as high as we want it to be at in the U.S. economy. That is why home loan interest rates have gone up to where they went to, and now we want to see them coming back down. So when are these reports coming out? The Consumer Price Index report is being announced for the month of January. We're getting that report next week, Tuesday, February the 14th. Right behind that, Thursday the 16th, we're getting the Producer Price Index report. Then, I believe it's Friday the 24th, we're getting the Personal Consumption Expenditures report. But it's not going to be all the way until March. It's going to be March the 22nd before we hear again from the Federal Reserve. So these numbers are going to be coming out. The PCE, the PPI, and the CPI are going to be the leading indicators as to where home loan interest rates go for the next month plus. So we need to pay close attention to those. So next week is a very big week with both the Consumer Price Index and the Producer Price Index being released. So let's take a look and see where we are at on our home loan interest rates as of today. Go over to our Brent Bruce Daily scenario here. And remember, it's interesting. I continue to have people say, Brent, look, the numbers that you're putting up there, they're not real. Or I'll have a real estate agent say, hey, I talked to my lender and they said that that's too good to be true and that those numbers aren't real. If you think that, give me a call. Give me a try, send me a client, and I will show you that these numbers are real numbers. These are our interest rates, and if I say it's with no points, it's with no points. There isn't an additional origination point or discount point or anything like that that's being hidden. It's just that they don't have that low of rates, so they don't think that they're available. You need to be in touch with me. I don't know why I'm not doing the pre-approvals for all of your clients. Give me a call and we can talk about that. Make sure that you do subscribe, and we'll be able to hear these reports each day. So let's take a look and see where we're at on our interest rates. Let's run this scenario right now. All right. Our very well qualified 30-year fixed conventional home loan is at 6.375, again, with a credit of $432. Now, if we open this up here, you can see that we can get to 5.999. We're getting the fives for less than a half a point, 0.353% points. If you want to pay a point, you're going to be sitting just about 5.875%. Let's open up the parameters here to make sure that I am showing you the numbers. And again, right now I have a Tennessee scenario in front of you. I do business in Tennessee and California. My California pricing is exactly the same. So this is going to be the same numbers either way. So make sure that you do reach out to me. Let's talk. If you have some clients that need to be pre-approved or are having, concerns about the home loan interest rates, there's so many different products that we could talk about, whether it's 2-1 buy downs, 3-1 buy downs, USDA products, zero down products. Let me know how I can help, because ultimately that's what I want to do. We want to be able to help you and educate you on how things really work in the home loan interest rate world and in the mortgage world. So reach out. I'd be happy to talk with you. I look forward to getting back with you tomorrow. And again, get ready for a busy week. Next week, I'll update you on how things look in really about this time tomorrow. I'll talk to you then.